Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, today is July 4th, exactly a month to June 4th, when the Lok Sabha elections results day took place and which triggered a sharp fall in the market. And since then, we've actually seen that the markets have made one record after the other. The Nifty has also rallied 3,000 points in just 1 month's perspective. And yesterday was the day when the Sensex hit a milestone 80,000 and the Nifty also crossed over 24,300 mark too. Now remember, for the Sensex, it's been the fastest 10,000 point rally from 70,000 to 80,000 as well. And yesterday it was all thanks to the banks that this new leg of the rally and the record highs were seen, especially led by HDFC Bank, that led the charge on the upside. While other index heavyweights like Reliance Industries, TCS and L&T, however, they kept the gains in check as of yesterday. But today again, it's Thursday, and this will also be the weekly options expiry for the Nifty. That could see now a further decisive move on either side for the index today. Of course, we will also be looking at how the markets will be reacting to global cues, which are far and few between, and what augurs well on this weekly expiry. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. We are on the weekly expiry of the Nifty, as Sakshi daily points out. In the last 1 month, from the low of 4th June to the pre-opening of July 4th, ladies and gentlemen, there is a 14.3% rise on the Nifty and there is a 15% rise on Bank Nifty. 7,000 points Bank Nifty has gathered from a low of 46,000 to 53,000, which is yesterday's close, and 3,000 points is what the Nifty has surged from a low of 21,230 to yesterday's close of 24,286. The mood looks buoyant, cues are strong. You have the daily Nifty chart in front of you. We'll also show you the US 10-year yield chart, and you will see a very sharp dip that has come in the US 10-year yield, pointing to lower inflationary expectations and possibly a rate cut in the pipeline in the month of September. If that does not happen, it's okay. Our markets in any case are on their own trip. So in the last 5 trading sessions, as far as the Nifty futures are concerned, the index is up 1.1% or roughly 280 points. And over the last 7 sessions, we are making continuously higher highs and higher lows. This is a trending bull market, ladies and gentlemen. At different points of time for the Nifty, separate sectors come up and help. We've seen IT move very fast. We've seen Reliance hit a record high, and over the last 2 or 3 sessions, it is the beauty of HDFC Bank which is coming to the fore. I'll request the PCR to show the chart of HDFC Bank. Sakshi, just a minute from your side. What was the FII number for yesterday? Any update if you can just provide?
Shail, the foreign investors mopped up stocks worth about 5,483 odd crore rupees in yesterday's trading session.
Okay. And now, ladies and gentlemen, the chart of HDFC becomes a little more relevant. We'll come back to it. And the beauty of this chart is in the volume that was traded yesterday. About 10,000 crores worth of shares were traded on HDFC Bank yesterday. Hold your breath. The turnover was 3.8 crore shares. The delivery was 3.87 crore shares on a total turnover of 6.16 crore shares, which is 62.8%. Sakshi, this is huge. Why is it huge? Just compare it to the 5-day average. The 5-day average is 57%, which translates to about 1.55 crore shares of HDFC Bank going into DMATs. The 30-day average, Sakshi, is 1.3 crore shares daily, and which is a percentage of 55% of total delivery charge. So not only has the number of shares going into DMATs increased exponentially, the percentage of delivery has increased, which points to people are very hopeful that HDFC Bank will rise further from current levels. This is a point to be noted, ladies and gentlemen, that if HDFC Bank rises, there is little or no doubt that Nifty and Nifty Bank Nifty Bank actually has a 33% weightage of HDFC Bank, and about a 10% weightage of HDFC Bank is in the Nifty. So again, I repeat very clearly, if you are not comfortable with this rally, the only thing that you should not do is short it. Just stay on the sidelines, wait for the market to at least close below 2 or 3 days low, and only then attempt a short or a sideways or some kind of option selling. Sakshi, this is a roaring bull market right here in front of us. Let's hope it continues, and the kind of upticks that we've seen in many sectors, many stocks points to extreme enthusiasm for the sector. The other thing I'd just like to point out in the options picture is that you see a very strong support for the Nifty at 24,200 and 24,100. The level of option writing on the put side as far as the Nifty is concerned on the weekly as well as the monthly expiry is phenomenal. So bulls have consolidated their support around 24,200, 24,100. Any dip towards 24,200, 24,150, 24,100 if possible needs to be purchased. Remember, all gap ups first, the Nifty opens with a gap up and then it sort of comes down for about 70-80 percentage points of the gap up, as it happened yesterday. It fills that gap partially and then starts to rise. So if you miss the gap up, the thing is to wait for the market to sort of react to that profit booking and then get back in. This is the best strategy that you can follow. And Nifty Bank, my understanding is that after yesterday's 900 point rally, you just might see a mild rest that the Bank Nifty might take, and we have 54,500 opening on Nifty Bank options chart. Major support is at 52,700. So these are the two indices that are in good momentum. There is very strong short covering happening in options chain, and if you look at the FII net contracts on the long side, they now stand at 3.78 lakh net contracts on Nifty. Ladies and gentlemen, this is a very sharp up move. Of course you will see mild profit booking, but again I say, this is not a market to go short. Please be very careful. Stocks that are there on my mind are only one: Orient Cement. A major newspaper daily reporting that Ultratech Cement, which recently purchased a 23% stake in India Cement, is on the prowl again and in conversation with the owners of Orient Cement to sort of amalgamate it with Ultratech Cement. How that progresses, only time will tell, but a lot of business updates coming in from a host of companies. Sakshi will operate, and she will tell you why US markets rose, Nasdaq at a record high, and of course S&P 500 at a record high. They are closed today, Sakshi, so tomorrow you will have less work.
Less queues to take care of. Yes, it was a truncated week. US stocks rose on Wednesday in a truncated session right ahead of the holiday, with the Nasdaq Composite scaling a fresh high. Nasdaq settled about 0.8% higher in trade. The S&P 500 also ended about 0.5% higher. The Dow Jones average, however, closed just a mild negative, about 0.06% lower in trade. Remember, both the S&P 500 and the Nasdaq have hit new records in this truncated session, and this is after Tesla shares gained for the 7th day in a row. They added another 6% in the shortened trading session. We've also seen that the Brent crude was trading about 0.5% lower at about $86.99 a barrel. Gold futures were again at 0.22% higher at $23.61 an ounce. Remember, US markets will be closed today on Thursday due to the Independence Day holiday as well. So we'll have to see less cues from Asian markets for tomorrow. now. Asian stocks, remember, hit a 27-month high on Thursday as softer US data narrowed the odds on a September rate cut there, boosting the bonds and the commodities as well, while dragging on the dollar. So most markets were seen rising, mirroring similar moves that were seen on the Wall Street overnight. Remember, US economic data and Federal Reserve's June policy meeting minutes have supported the traders' hopes on rate cuts, and therefore you've also seen a mirroring effect. So a 0.25% uptick on Nikkei, Kospi up by 0.8%, Hang Seng up by 0.4% as well, and Shanghai up about 0.07% as well. So that's as far as the Asian markets are concerned. Now the Gift Nifty is indicating again a gap up start above 24,450 for the Indian markets. Let's see whether that gap up really sustains. We already talked about how the overseas investors have actually turned net buyers after 3 days of selling. So FPI's mopped up stocks worth about 5,483 odd crore rupees in yesterday's trade. While the domestic institutional investors, they turned net sellers after 3 sessions. They offloaded equities worth about 924 odd crore rupees in yesterday's trading action. Let's also look at a slew of updates coming in from a lot of companies, especially the NBFCs. So Bajaj Finance has reported new loans growing by about 10 odd percent year on year. To 10.97 million. AUM has grown by 37% on a year-on-year basis to about 3.5 lakh crore rupees for the company. Brigade Enterprises, the company has signed a joint development agreement for 1.2 square million feet residential project in Bengaluru. This project is to be spread over 8 acres with a gross development value of about 1,100 crores. So we'll keep an eye out on this one. Again, updates coming in from L&T Finance. The company has reported portfolio realization at 95%, retail disbursement up 33% year on year, and retail loan book up 31% on a year on year basis again. Now, Suryodaya Small Finance Bank, another one, the company has reported a gross advances growth of 42% on a year on year at basis at 9,037 odd crore rupees. Deposits have also been strong, about 42% uptake on a year on year basis as well. Now, from the metals pack, I'm keeping an eye out on Tata Steel. The company has received the NCLT's nod for the merger of Angul Energy into itself. Bandhan Bank, again, we've got a report saying that the loans and the advances have risen about 21.8% on a year-on-year basis. Deposits have increased by 22.8% on a year-on-year. So that's another update coming in from the company. GETND. The company has now received 64 million euros order from France's Grid Solutions for the supply of high voltage products. So we'll continue to keep an eye out on how that one has moved. And Star Health, the insurer, has set a target to double its gross written premium to about 30,000 crores over the next 4 years. That's the target that the company has given in. So we are going to be keeping a keen eye out on all of these companies. And Ultratech Cement and Orient Cement, like Shell pointed out, is going to be important for us to keep an eye out on as well. In fact, there's also an important update on Inox Wind. I think the promoter infusion will be resulting in the company getting debt-free. So we'll continue to keep an eye out on the Inox Wind counter too. Let's welcome our guest now on the show. We have Mr. Devin Choksi, MD of DR Choksi FinServe, now joining in on this very special edition. Warm welcome to you, sir, and thank you so much for taking the time out. Well, yet again, we greet you and the markets greet you with all-time high levels. And the question that beckons your keen view and your pearls of wisdom is that should retail investors continue to deploy afresh when the Sensex has hit an 80,000 milestone and continue to scout for fresh ideas, or stay on the sidelines? What would you advise?
Yeah, good morning, Sakshi. Well, I think pertinent question about how retail investors should operate in this market. Very simple formula that you keep it. You have monthly amount of money which you want to deploy as a retail investor. Systematically keep deploying that money. And if you have created certain portfolio which is fundamentally convincing portfolio for you, then keep on adding the weight in this particular situation if the prices are normalized. Say, for example, many companies in the Nifty 50 basket today they are available despite of the rising market, despite of all-time high market, they are still available at a price and the valuation which is probably at one point of time, I think when the Nifty was somewhere around 17,000, 18,000, or 19,000. Now, these are some of the stocks where the fundamentals are good. Yet, I think they are languishing in this entire rally of 17,000 to 24,000 plus. I think of Nifty at a level at which I think they have been languishing at the same level. Maybe I think those are some of the good opportunities that one can go for to play safe in this market. Similarly, I think to play safe in this market, I think at this point of time, if you are deploying fresh money, stay away from commodities because commodities is something which you are not very sure about. Unless I think you see the rising uptrend in the commodities, probably I think you need to keep yourself little away from commodities at this point of time while staying focused on the fundamentally strong stock, particularly as I indicated in the Nifty 50 basket, where probably you have reasonably good amount of attractive propositions available from investment perspective.
Namaste Devin Bhai and a very warm welcome to you. Good morning. What a lovely day to have you post 80,000 on the Sensex, 24,300 almost on the Nifty. Can you go back in time and remember the earliest Sensex number when you started working in the Lal Street in the Bombay, the BSC office?
Yeah, Shail, good morning and namaste to you as well. When I started myself, I think in the Dalal Street at that time, I think Sensex used to be somewhere at 100 levels. And today, what you are seeing in Sensex is 80,000. So it's a whole journey of around 38 years or so, in which I think I have seen these complete transformations of market. In fact, very fortunate I was to have been
Begging your
part of it.
pardon for interrupting you. Did you see 100 as the base on the Sensex and then you've been tracking it since then?
That's right. I think it's 100 level of Sensex. I think since when I think I started tracking. Maybe some
Oh,
of you were
wow.
not born that time.
Wow. Viewers, that's why you know why we get Devin sir to talk about the kind of wealth of wisdom that he has with him. You know, how he has tracked the journey of Sensex from 100 to 80,000 now. Who better than him to really help us understand how long this journey could be unfolding? So all of us who feel a FOMO that, you know, oh my God, the markets will fall now and crash now. Should I book my profits? Have a long-term view just like how Devin sir has been having. Please continue, sir.
So I think this journey will
Devin
continue,
Bhai,
and
what are the
probably every
three?
generation will get an opportunity to be part of this journey. Fortunate we are that I think we have seen probably the past. Fortunate we are that we are going to be experiencing the future, and fortunate we are that we are experiencing how exactly the future is unfolding today in the present. So in each of three eras in which I think we all are here today, we are going to have some phenomenal amount of experiences going forward. There would be situations when there would be corrections in the market. There would be situations when there would be euphoria in the market. And both these situations will keep on weighing on either side, I think, as we progress. But most important part of our journey would be to basically have the confidence in India economy, have the confidence in our growth path, and have the confidence about our economy becoming a developed economy, becoming somewhere around $40 trillion economy from what it is currently $4 trillion economy. So that confidence of next 25 years is more important in this entire journey. Naturally, the wealth creation process is going to follow. We are not going to erode the wealth. We are only going to create further wealth. That is how I think I look at the entire possibilities in the journey going forward.
Okay. Devin Bhai entered the markets in 1986, ladies and gentlemen, and I'm going to ask him a couple of questions on how to sort of create long-term wealth. This is far more important than what to do today. Devin Bhai, you've been a very generous sharer of your knowledge. I am a personal beneficiary over the last at least 27 to 28 years since I have met you. Please help us understand the three mistakes that you made and which you hope not to repeat in the journey, which is probably about 5 more decades from here.
Yes, Shail, I think it's important. I think the mistakes are also part of our life. And probably I think that's what I think one can share their experiences. In 90s, probably I think when we started looking at the companies, I think viewing the larger amount of picture and the growth. Probably, I think we believe too much the promoters and I think their vision to implement some of the game plans that they had spelled out. In the hindsight, I think we would say that again, we could have possibly gone a little more deeper inside into the subject and probably, I think, develop that extra knowledge to believe or not to believe that particular promoter segment of group of promoters in that particular period. Maybe those promoters also fell victim of a situation wherein I think on a smaller capital they dreamt really big. And that's where probably I think they couldn't succeed. That was another realization that I think in hindsight we gathered that when your initial strength is weak and you are trying to, I think, create very large organization, at that point of time, I think the financial discipline is extraordinarily important. Many of the promoters, I think, missed that financial discipline, and as a result of it, I think the minority shareholders also suffered because of, I think, that such mistake that they did. Otherwise, I think, as far as the business selection is concerned, I must say that I think progressively we have been selecting better and better businesses, and that's the level of confidence that you get when I think you participate in this market. That how you get develop the wisdom that which business is good for the individual shareholders, which business is good for the family office shareholders, which business is good for the institutional shareholders. That kind of a maturity or experience that we have gained in this particular period is probably, I think, most invaluable. Today, we probably know that after looking at the individual and his requirement, we probably would know that I think whether this individual would be in a position to hold this investment. I think suppose if he has done in his portfolio for next 10, 25 years. That is the kind of understanding that we have gathered out of this particular market. So yes, mistakes have also taught us a lot many things, and that experience is something which we can talk for hours. But in general, we believe that I think those mistakes are worth making it because then only you can probably score on a newer levels after correcting the mistakes.
Devin bhai, you've created immense wealth for your customers at DR Choksi and before that KR Choksi stocks and shares, as also for your own self. How much of that came from FNO, and what were the three things that you did well as that wealth was being created?
Well, practically nothing out of FNO, if I may have to say this way, because frankly, I think we refrained from playing FNO in the market. Though I must say that I think in the early part of my start of my career in the market, I was equally interested in I think looking at how the FNO market operates. But somehow or other, I think my occupation of studying the company, doing the research, and creating the portfolios for investors did not permit me enough time for operating through the FNO market. And as a result of which, I think I practically stayed out of the FNO as much as I could. Not that I not experienced the product, not that I'm not experiencing the product today, but the fact is that I think that is only for the purpose of I think taking the right conviction in the market, knowing how many number of participants are participating through that particular segment of the market. Such small experiences that you have to gather, I think then probably are a small part of FNO activity. But no, I think the wealth creation happening out of FNO, absolutely no. On the contrary, I believe that I think by staying invested has created a larger wealth vis-a-vis, I think churning the portfolio.
Wow, wonderful. Staying invested has created more wealth. That is definitely the key that all the viewers must take note of as you get that experienced voice talking about how should you be really investing at in markets when they are continuously scaling newer records. Devin sir, now let's begin by understanding, what is going to be keeping markets afloat at these levels and probably lead it to the next level. We just started to see that HDFC Bank has now finally woken out of slumber, started to perform. A lot of viewers, investors are still confused that whether this will be a sustainable move or not. Should one now start banking on these heavy, large cap, heavyweight banks? Will they lead the rally from here on? Will they outperform? What's your own sense, sir?
So I think the first point to answer is that I think the FOMO traders have returned into the market. Those guys, I think, who had the large profits, who kept themselves away from this market. And as a result of which, I think some of the large cap companies, like the name which you mentioned, HDFC Bank, or for that matter, companies like SBI, or even some other banking names like Kotak Trust. I think those companies they continued to perform well on the fundamental side of the business, yet they were neglected in the market for a variety of reasons. In my viewpoint, I think the reason was that most of the traders, I think, stayed absent out of the market in the entire Nifty journey, large cap journey. Today, they have returned with force, and they are basically, I think, putting larger sum of money. So currently, without, I think, material change in the business conditions of some of these companies, they are now attracting huge amount of inflow of money into the counters, and HDFC Bank is one of them. Given the situation that I think the weight allocation is taking place in the portfolio of traders, given the situation that they are taking position for 3 to 6 months or even for that matter 1 year or plus, I would think that I think some of these counters would probably rally and rally for good. As far as I think the re-rating is concerned, they'll have re-rating. On the other side, other part, I think if I talk fundamentals, likes of HDFC banks, likes of Bajaj Finance, likes of Kotak Bank, they probably moderated on their valuations. If they were at 17,000 Nifty, if they were quoting at a valuation in excess of 3.5 to 6.5 times price to book value in these banks' cases, I think today that situation, because of the growth in the profit, has created that the valuation is today is staying lower compared to what I think it used to be. So that is again creating an attractive proposition. Last but not the least, I think the people are finding meaningful entry into the market also because of the FI weights have actually gone down. So all these factors now combined together, and that is why these finance stocks are currently rallying, which I would believe that I think they hold the possibility of doubling every 3.5 to 4 years from current levels.
Right. Devin bhai, I also wanted to understand your view on how the power sector is now shaping up. A lot of research reports are coming on the beauties of PFC and RAC, how we are facing a power shortage, how power equipment makers will create a different kind of an environment than what we are already in. How much of this is hype and how much of this is reality? What do you think are one or two stocks where fundamental strength is undeniable, valuations are good, and they present an opportunity even now?
Yeah, Shail, I think very valid question actually. On one side, government is the biggest influencer in this entire area. They are significantly putting in larger amount of allocation of resources towards power generation, uh, including in the renewable segment, where majority of the investment is now going into is creating a good buzz as far as I think the market participants are concerned. On the other side, the distribution part of the power is really, I think, getting a right attention. Also, because of the fact that I think the evacuation of power from the generation source to the consumer distributor, I think that is what is important as far as I think the activity goes. Both these arms are going to be funded by none other than the NBFCs and the banks, because these are some of the larger projects where probably you require the funding upfront, wherein the revenue and the profits would come in subsequent period of time. So certainly RFC, PFC kind of companies are definitely demanded. Also because of the fact that government helped these companies in correcting their balance sheets, in repairing their balance sheets, in bringing them back to I think the capitalization level at which I think they should have been. And at the same time, I think they are having less number of NPAs now that they were till now having. So from that perspective too, I think with the clean balance sheet, and fortunately the valuations are not so very expensive. I believe that with the ability to create a larger amount of liability franchises and ability to, I think, deploy that fund on the project side of the activity, in the generation as well as distribution side of the activity, both these companies they remain attractive proposition. Even though in last 1 year they have given fabulous return, I would still believe that I think they are the steady earners for portfolios going forward as well.
Okay. Well, pre-open rates are already upon us. Some of them you will be continuing to see on your screens also. 24,350 right now, 64 points higher on the Nifty. We'll cut back to those levels and you can actually see how the Bank Nifty, let's look at how that one is also reacting today, because that was the key driver of the markets yesterday. And then we'll get back to our conversation with Devensa. You can see some of the screen momentum coming in. But Devensa, I wanted to understand also with respect to the upcoming earnings and the focus on the IT space, and how are you really looking at this entire space right ahead of the big numbers that will be coming in, or are you just keeping a long term eye on how IT should be a core of one's portfolio, and then one should just forget about this noise and the downturns and the underperformance, but one should continue to focus on some solid names within the portfolio of these names? How are you approaching this sector?
Given the fact that I think computing has become a reality, and the significant amount of cloud computing is also thanks due to a higher amount of bandwidth available in the hands of the consumers, call it Web3. And that is where probably I think the larger amount of applications are required to be developed for majority of the corporates. That's where our Indian IT companies are pitching in and pitching in very favorably, I would say. Be it AI-based development, be it any other technology blocks like blockchain for that matter, or even MR, VR, and large learning languages. I think those models which are basically now coming up. I would think that
Okay,
I
I
think
guess there is,
the
yes, there's
screen
some kind
has
of a technical issue.
freezed. Sakshi, let's look at a couple of stocks before we get Devin Bhai in. Cello. This is Cello World Limited. They have a 730 crore rupee QIP opening today at 852 rupees, which is about, from the current price, a 12 percentage point discount to what you see on the screen, 1000 rupees. A strong move coming into L&T Finance. Very good business update that it has given, 3% higher, 194. I'd just like to look at what the PSU pack is doing, because that was a thick trade yesterday. Dredging Corporation as usual, 5% higher, 1330. There is very little of effort to be made on Dredging Corporation. या तो 5 ऊपर होता है या 5 नीचे होता है. Bama Lorry, 2.7% higher, 280. I see movement coming back in Hind Copper, 328. Metal is shining, NMDC and Steel Authority. Let's look at the high beta space and what is it doing. You have Hindustan Zinc, 1.3% higher, 682. HBL Power, 1.8%, 1.2% higher. Very quickly into rail. Okay. HBL Power, KEC International. How about the Sarkari companies? 0.5% higher on KRFC. I'm so sorry, IRFC, 177.80. IRCTC rights are 0.5% higher. RVNL 0.5% higher. So it's a muted opening. A very quick look into FNO. Okay. L&T Finance we've discussed. Nothing much of consequence, ladies and gentlemen. Let's get back to Devin Bhai. If we have is, yes, he's back with us. Devin Bhai, it's becoming increasingly difficult for us to defend what's happening in defense. 10%, 8%, 5%, these stocks are jumping on a regular basis. The ones in the PSU pack and the private sector is also not shying away from posting these aggressive daily gains. How are you looking at this space? Is this something to be worried about with the kind of rallies that we are seeing? Will retailers get stuck?
yeah, I think if you are giving a distinctly high amount of valuation vis-a-vis the growth, then certainly you run a risk of getting stuck into the stock, and that is not very difficult to identify as well. Most of the defense companies, they would be in a position to grow their revenue and the profit at the best between 15 to 25% in next 3 years. Now, suppose if you end up giving, that means in next 3 years time, I think this company would be little short of getting doubled from what the current base is as far as their profits are concerned, assuming that they are on a sustainable trend. Now, If you end up giving them the valuation, which is 3 years in advance, then certainly you're going to get the punishment in between, because the market is not going to move in the same manner in which it has been moving currently. There would be a situation of some corrections in different quarters, different period of time in next 3 years' time. If you are lucky enough, I think, to have the cash in your portfolio, that situation of corrected price would give you the opportunity. Not to compare the situation versus one versus another, but the fact remains that, for example, I think companies like Bajaj Finance in the finance space, I think that company probably ran into the premium territory much sustainable basis, I think, for many years. And last 3 years or so, I think the stock probably has not done anything in the stock market. Whereas in last 3 years' time, the Nifty has moved up from where it used to be to what it is today. So from that perspective, if you look at it, I think the similar situation could happen to some of the manufacturing names, some of the defense names, what we are talking about. That if you are giving them a premium valuation, they will take time to rationalize that valuation, come what may. And in that situation, you should have the holding power. If you do have the holding power, I think journey will not get disturbed. But the fact remains that I think you will not earn that particular period of time the return. So this is where the catch is. And I think that's where the art is to deploy money in a systematic manner. When the opportunity is in your on your way, that time I think you should be deploying the money. That is how I think we look at it.
Okay. Devin sir, the other space that I wanted you to throw some light upon is the entire rural recovery theme that we have been looking at. Should one be playing this theme through FMCG, consumer staple players? Should one be really looking at the agri-focused names? Monsoons are already upon us and it's covered the entire nation. How should one be really, or maybe two-wheeler space? They have performed better than the PVs and CVs in the latest sales numbers that have come in. How are you looking at the rural recovery theme to be played out from a medium-term perspective, sir?
The rural recovery is real. That is important part. From what it used to be to $2,500 per capita income has already happened. And going forward, March in 2035, we are likely to see the per capita income in the vicinity of around 4,000 to $4,500. So, which means that the spending power in the hand of the consumer is going to be systematically increasing in next 10 years as well. Given the strength of India, that what we have in the rural India, probably 70% of our business is concentrated in whichever form we look at it. I think that's where probably the bigger part of the play is going to be going forward. And that's the reason for which many of the consumer companies, including FMCG companies, including two-wheeler companies, including microfinance companies, NBFC companies, housing finance companies, each one of them have been keeping their focus on the rural India, because over there their business is basically seeing a larger amount of traction, the pickup as well. In my viewpoint, instead of selecting one over other, I think you will have to balance the portfolio with selective stocks in your portfolio. Some of the FMCG companies, they look really brilliant from the point of view of their positioning in the rural market is concerned. They've deployed a systematic strategy of how effectively they should supply the products into different pockets of India, which is a vast country, where probably I think the demand for A product would be in one pocket, versus demand for B product would be there in the other pocket. And that's where I think they're using systematically the artificial intelligence for even doing the demand generation and creating the supply chain mechanism thereafter for deploying the production that are the goods that they have in the rural markets. So yes, I think the smarter companies within the basket probably would have relatively better amount of performance to talk about going forward.
Okay, let's see what the markets are doing at this point of time. They've settled. HDFC Bank is 0.5% lower, 1759. Nothing to be worried about. Bit of a profit booking happening in Petronet, 0.2% lower. Kotak Bank, 0.2% lower. Remember, these are all stocks that are showing signs of profit booking at current levels and nothing to be worried about. I'd just like to see what Orient Cement is doing. This is a counter that should be in the thick of trade as far as prices are concerned. Orient Cement at this point of time is 5% higher, 322. Needless to say, this is a record high. Devin bhai, very very quickly, your top mid cap cement pick, given the strength of mergers and acquisitions picking up pace in this industry.
Challenging sale, I think, at this point of time. Maybe the likes of Dalmia Bharat could be probably relatively a better choice. For that purpose, I think I would think that why select the mid-cap cement companies? Why not, I think, go with the larger ones? Why not go with Ultratech and SSC Ambuja kind of a group where they have pan India presence? They have much better ability to, I think, buy out some of the small and mid-sized companies. Look at EV per ton for Ultratech. I think it is $260 to a ton. And look at, I think, the EV per ton to some of the smaller units, like they are quoting at between 100 to $130 to a ton. So, frankly speaking, it's an arbitrage. On one side, the larger company is commanding better valuation in the market. On the other side, I think the smaller companies, they do not, for a variety of reasons. So they become vulnerable to be taken over by the larger company. And that's where the strength of the larger company becomes even bigger and stronger. So in my viewpoint, I think instead of fishing around with the smaller things, with smaller ponds, I would think that I think this is a big opportunity in cement business particularly. So stay with, I think, the likes of the bigger ones like Ultratech and ACC Ambuja or Adani group of companies. That's where probably I think you will have the advantage of size as well as I think the making money out of the portfolio of cement.
Okay, ladies
Okay.
and gentlemen, the markets are upon us. A 50-point uptick on the Nifty, 50-point uptick on Nifty Bank. IT is taking it away, 250 points higher on the Nifty IT index. And of course, the Nifty 500 is also in good shape, 66 points higher. Orient Cement is the first stock we will see, 3.5% higher at 317. Remember, Ultratech is on the prowl and both promoters are talking to each other. Let's dip into the markets. Let's see what HDFC Bank is doing. 18 rupees lower, 1750. How about a quick one on Reliance? 11 rupees higher, 31.15. How about Infosys? 8 rupees higher, 1635. TCS is the star of the day on the top index heavyweights, 32 rupees higher. We have 4,000 on TCS, ladies and gentlemen. This is really good news. On the look of it, the first 10 index heavyweights, Sakshi, they are in the green. This points to a very strong momentum that is coming back in the market. Let's look at most actives. It's mostly frontline counters. Hindustan Aeronautics 0.5% higher, 54.94. BEL 0.5% higher, 316. BHEL 0.6% higher, 313. Nothing much of interest as well. Let's look at the top gainers. Lupin 5% higher, 1710. It's the pharma space that is shining brightly. Nothing much except for metals all around. Hindalco 1.9% higher, National Aluminium 1.5% higher, NMDC 1.5% higher. Vedant, they have come up with their business update. This is 1.2% higher. A very quick one into NSE 500. Okay, Cello. QIP is open for about 730 crores. This is the top gainer in the NSE 500. Inox Wind 4.5% higher, 149. Okay, you have NBCC 2% higher, Mankind Pharma 1.7% higher. A quick detour into volume buzzers. It's okay. I think Cello World 5% higher, 1008. We'll wait for Rajesh Palvia ji to join us. I think he's with us. Rajesh ji, namaskar. A very warm welcome to you. Nifty has tested its intraday low of 24,328 and then it's bouncing up. The resistance is at 24,369. Your view on the Nifty, what to do, and two stocks that you would want people to get into as far as outperformance is concerned. I suggest you start with two stocks.
So first stock Shailji is from automobile, that is the Mahindra and Mahindra. That stock is looking very promising. The way stock is now again, moving back above 2900 mark. I think here is a potential to continue upward momentum. 2960, 2970 would be the next target for Mahindra and Mahindra. Your stop loss should be placed at around 2875. The second stock that we like is from oil and gas sector, and I think one can now focus at Hind Petro. There was a brief correction, but again, since last 2 3 trading session, we are seeing that at lower band there is a buying interest for the stock. So I think HPCL Hind Petro can be a stock where we can see upside momentum towards 344 to 348. Here on the downside, you can place a stop loss around 327.
Okay, got that. Well, a lot of spaces are on the move. You can see that the Sensex, the Nifty, and the Nifty Bank, they've all opened at record high levels, viewers. So that record run continues on the expiry morning trading session, at least for now. All the sectors barring flattish trade on FMCG, they're all up and about in the green. Metals are gaining strength. You can see Hindalco now moving to the top spot. Of course, IT is doing very well at this point. So you do have stocks like HCL Tech, Wipro, TCS, Infosys. All of them are buzz with gains. LTI Mindtree also joining the fray. Banking majors like ICICI Bank. You also have stocks like Kotak Mahindra Bank supporting the indices at this point. Then you also have stocks like M&M also joining the sharp fray. Let's look at Wockhardt Pharma. I think it's about the fourth or fifth days of gains for Wockhardt Pharma. It's again up 8% in trade today. And Lupin, of course, from the pharma space is now among the top movers within the FNO band as well. About 3.8% higher can be seen for this one. Let's also pull up Biocon to see how that one is doing. That was continuously gaining some strength. So some pharma majors are also looking good at this point in time. So there you have it. Biocon is absolutely flat at this point. But Brigade Enterprises, remember we had discussed about the joint development of agreement in Bengaluru, 1100 crore rupees of a project, so 4% higher in trade. You also have Suraj Estates, that's up by 6% right now. And let's also look at Kaya Limited. Interesting development right there yesterday. Marico and Kaya Limited have tied up for some selling of the products and marketing of the products that Marico will do for Kaya. You can see Kaya Limited is now up 10% after that news flow is coming in. So, slew of stocks to really discuss. Let us first bring in Rajesh Ji to help us understand on Marico and Kaya Limited. How are you looking at this development? Should one be really looking at this move up? It's a 10% upper circuit right now. So there is no point asking you on Kaya Limited what should be done right now. It's already at 499. But is this a move or a development that would further have legs beyond today?
So I think Kaya is already locked at upper circuit. So I think
Yeah.
the way stock weekly chart is now placed after this up move. Now we can see furthermore upside towards 530 to 540. That's the next target where stock can move further. Let's see whether this upper circuit remains uh, for throughout the day or it opens. Even if it's open, the 475 is the important support area on the downside. So that level needs to watch as a support area for this up move. So 475 should be your stop loss.
ठीक
Marico
है.
stock managed to give breakout of falling trend line, but still there is follow-up buying is missing in this stock. 625 is the key resistance for Marico. Until this stock not process 625, it may remain on the sideways manner.
Okay, got that. Again, a very, very volatile trade for some of the sectors. Pharma, financial services, FMCG, they've slipped into the red. Nifty also tested the negative zone just now. So we'll keep an eye out on how the sustainable the move remains after hitting those record high levels. Reliance Industries is up 0.5%, so that's lending the support. PSU stocks, let's look at the PSE index, 0.5% higher. The stocks that are up and about within this is NMDC, 1.5% up. HAL is up by over 1%. REC, BHEL, NHPC, Steel Authority, Hindustan Petroleum. These are some of the stocks that are doing well. You did talk about in Petro as one of your top counters, Rajesh Ji. But within the PSU pack, is metals more interesting to you, heavy engineering or defense? Where are you keeping an eye out on?
So defense is always a bullish view at this moment because the way most of the defense stocks are moving up. I think BL, HAL, all these stocks may be looked at for further more upside, and There is no stoppage for all these stocks. There is a continuity of uptrend, so that would be our preferred choice. But yes, if we move to the other PSUs, I think metal would be the next sector where we can keep eye. Here we believe that National Aluminum can be looked at. That stock is looking promising, as well as SAIL is also looking promising. The way stock is recovering from its recent low, I think National Aluminum can be a stock where we can see target towards 208 to 210. One can keep a stop loss of 193. SAIL is also looking promising from metal space. The way stock is recovering from its consolidation zone, we believe that here we can see traction towards 164 to 168. Possible stop loss one can keep around 149. From PSU space, I think another space there, one can look for near term to short term perspective. That is, PSU banks are also showing good buying interest since last couple of days. Still, it's a slow moving at this moment, but we believe the way SBI as well as the Bank of Baroda has shown buying interest from their recent swing low. I think there is a high possibility that SBI, if manages to cross above 855, here we can see a traction towards 865 to 870. So one can keep SBI on their radar. 850 is the immediate level. If it's crosses, then one can buy.
Right. I think we'll focus where there are trades to be had. Cochin Shipyard, 4% higher, 25.28. As far as prices and volume are concerned, it's just the 4 or 5 defense stocks that are doing very well. Garden Reach, 4% higher, 25.61. Marsgaon, 5.5% higher. Sakshi, there will be a digit change in Marsgaon today. Coming to you, Mr. Palvia, what do you think is happening on defense? Your top pick very quickly. Counters are moving like just crazy on very heavy volumes.
So top pick would be BL. That stock is for one can buy. Here we can see traction towards 340, 350 zone on a positional perspective. So one can look to buy and accumulate BL for with stop loss of 309. Another stock that is BDL. That stock is also looking promising. Now stock is approaching to its multiple supply zone, and after a consolidation, I think there is a high possibility that stock may attempt to give breakout above 1670, and then if breakout happens, then next target for BDL or dynamics would be around 1750 to 1800. So BDL is also buy with stop loss of 1620.
Fair point. Let's look at what's happening in the FNO space. L&T Finance. This is something which is the top OI gainer, accompanied by a very, very strong tailwind. This is high beta, low ticket at 190. This is something that needs to be looked at, but mostly a strong move coming into Lupin. We don't discuss this stock very often. Mr. Palvia, what is Lupin telling you on the charts? At 1700, I'm sure this is a breakout. Yes, this is the highest that we've seen since 22nd of May. What are the charts of Lupin telling you, sir?
So stock is now trying to penetrate its multiple supply zone on the weekly chart. I think today there was one attempt to give breakout above 1700, but again some supply pressure was there at higher level. But still, we believe that the way stock is consolidating since last 8-10 weeks, I think there is a high possibility the broader market is showing good traction. Pharma space is also looking bullish at this moment. So we believe that once that breakout happens above 1700, and if it's sustained, then there would be short covering action may trigger in this stock, and then possible target for Lupin on a positional perspective 1780 to 1800 would be there. So I think yes, Lupin one can buy. Here we will suggest to keep a stop loss of around 1645 to buy and accumulate this stock for upside target of 1780 to 1800.
Okay, right. Wockhardt Pharmaceuticals, let's look at that one. I think it's now in 10%, up right now, about 10 to 11% higher in trade. It's been on a continuous move since the company had got, about 5% higher. It went up and then came down a bit. Is the top, near-term top really made on this one, Rajesh ji, Wockhardt?
Very strong rally in this stock. In last couple of days, the stock has moved up sharply. I think almost it has attempted to touch four-digit target of 1,000 rupees. 995 is the today's high. So
Hmm.
I think it's almost now moved to the psychological level of 1,000 rupees. So I think those who have bought at lower level can take some partial profit.
Okay.
Overall structure is bullish for the stock, but again in the decline, if it comes around 880, 860 zone, it's again opportunity to buy this stock. The way stock has shown buying interest in last couple of weeks, we believe that here we could see further more higher targets going forward. So possible rally can extend to 1,050 to 1,100 also. I think some profit on the higher side one can take, and then again in the decline one can again buy this stock.
Okay, let's look at the broader gainers and the losers universe as well. On the gaining front, GETND is up about 5% higher. Remember, the company has received a big order from Francis Grid Solutions for supply of high voltage solutions as well. You also have Vraj Iron and Steel for the second day after listing is up 5%. Windsor Machines is up by 5%. You have Walchand Nagar Industries that's doing strong. You have Suraj Estates, like I pointed out, that's also moving strongly at this point in time. Country Club Hospitality, another 16.5, 17% up in trade. That's the kind of move that is coming in on that tourism major. Let's discuss this stock. Rajesh ji, it's a very small ticket stock. It's been doing, rising very sharply over the last few trading sessions. Could this be a trap for investors? Should one stay, aware of some such speculative moves?
So Sakshi, we don't track this stock actively, but as you pointed out, I'm just checking the chart of this stock. Yes, very strong move has taken place in this stock in last three, four trading session. The way stock has moved up on a daily, weekly time frame, stock managed to give breakout of its 2018 swing high. So that's the long-term chart breakout is already taken place in this stock. So technical on the technical front, 25 should be your stop loss, now trailing stop loss. If it's a hold about 25 level, then yes, really could be continue towards 32 to 35 also.
Acha, okay. Continue to hold on. Right. We'll also keep an eye out on IFB Agro Industries, a very strong move of 17% coming up. After a long haul, we are checking this counter. Hardly discussed this. 580 right now, 17% vertical spike right now that can be seen on IFB Agro. 18.5% now, could be testing that 20% circuit. Your sense, Rajesh ji, how are you looking at this chart of IFB Agro now?
So, very strong buying action in today's session. Stock now managed to give breakout above all its near-term, short-term moving averages. So, looking at the near-term structure, we believe that till stock is now holding above 575 zone, there could be another round of rally we can see in the stock in near-term. Possible next target we can see towards 630 to 645.
0.931, the first 15 minutes of trade are done. Let's look at the high and low of the Nifty. That will help us to decide which side the FNO trade is looking at. Remember, it's the weekly expiry of the index. The high is 24,372 and the low is 24,320. Flat trade is expected as far as markets are concerned. Remember, the Nifty is rallied from a low of about 23,350 on last Monday to where it is now. Let's look at the pullers and draggers on the index. For the moment, ICICI Bank is contributing 34 points to Nifty's uptick. Infosys is contributing 26 points. TCS 12. Reliance 10 and Tata Motors 8. What is pulling the index down is only profit booking in HDFC Bank, nothing to be worried about. The counter down 1.36%, 1745. It is giving an opportunity to long-term investors to accumulate itself. Bharti Airtel, a bit of a profit booking, nothing much to be worried about. Let's look at the new highs that have come into the market. As far as the Nifty 500 is concerned, I am a little tired of repeatedly marking the defense counter, so you can presume all 5 of them are at a record high. Okay, persistent. Now this is very interesting why I point this mid cap IT out, because Not only are we at the throes of the quarterly earnings, but mid-cap IT has traditionally led the frontline IT stocks into higher orbit. Rajesh ji, coming to you, what looks good? Everything is clicking, Persistent, Coforge, KPIT, Birla Soft. But according to your charts and to your understanding, what would be the best IT stock to look at for the medium term?
So, Shailji, you asked about two stock in the opening. Otherwise, if you asked for three, so I would have given Infosys also, because Infosys is also on my radar. So that stock is looking very promising. We believe that here the way stock has shown a long built up in last couple of days, there is a high possibility that in this up move, Infosys can continue. Furthermore, upside 1700 to 1720 would be the next target. So that's the large cap stock from IT pack. We are liking very much. Your stop loss would be around 1635 to buy Infosys. From mid-cap IT, if you ask me, Persistent is looking very promising. The way stock managed to view breakout on a daily, weekly time frame, and again, stock comfortably crossed its previous swing high of Fab 2024. This is the only stock where we are seeing stock is enjoying its all-time high trajectory. So I think Persistent can continue. Furthermore, upside 4800 to 4850 would be the next target. So buy on dip should be your strategy. Your stop loss to buy Persistent would be around 4620.
Fair point. And I think BDL is a stock that you had parked. It's doing phenomenally well. I think 1679 and moving strongly. What would you suggest, Rajesh ji, that we do on BDL? Is this a breakout?
Yeah, definitely. So I mentioned this stock from the defense space, BDL and BL. These two stocks are looking promising. The way stock now managed to cross 1670-75 zone, I think here we can see a target towards 1750 to 1800 for BDL. So after a consolidation of almost 6 weeks, now stock is breaking out. So the safety of margin is there. So I think BDL can be looked at to buy. 1635 should be a now stop loss to buy BDL.
Got that. So that's the view coming in on Bharat Dynamics. We'll continue to keep an eye out on that one too. Just wanted to point out Indian hotels. I think there are block deals happening worth about 37 odd crore rupees, kind of a trade that has taken place. 6.2 lakh shares have exchanged hands on Indian hotels. It's now buzzing even in the F&O space, about 2.2% higher. Cash markets, it's at 613. What do you foresee within Indian hotels, Rajesh ji? This was, I remember, when the entire tourism buzz had started, one of the key stocks that was a favorite of most of the analysts back then. It has lied low and out of sight in a little while after that. Coming back into focus, anything that could continue as a sustainable move here?
So, long-term structure for Indian hotel is on the bullish side. Though there was some corrective move in last 2-3 weeks, but still, if we analyze on the near-term, short-term perspective, also stock is very well holding above 50-day moving average, and now stock is almost penetrating to its 20-day moving average. So I think the way stock has recovered from its recent dip of stock has taken the support from 600 level. So I think that should be placed as a stop loss. And again, if it stocks crosses above 620-25 zone, so I think there would be short covering in Indian hotel, and then possible target we can again see towards 650. So for long term perspective, yes, we are bullish. For trading perspective, one can keep a stop loss of 600. Immediate target is 625. If it crosses 640, 650 would be the next target. From the same space, I think Sakshi, one can look at Thomas Cook also. The way stock managed to give breakout and the way stock is holding the ground at higher level. Here is also potential for upside momentum. 265, 270 would be the next target for Thomas Cook. One can keep a stop loss of around 240 to buy and accumulate Thomas Cook also.
Okay, got that. The real estate space, many mid-cap stocks are actually doing very well. Landmark Properties is now 17% higher. We were discussing Suraj Estates, that's up 7%. You also have Brigade that's been doing very well on the back of news flow too, Prime Focus. How are you looking at some such stocks, Rajesh ji, and what looks positive to you within the real estate space particularly?
I think some brief profit taking was there in most of the real estate stock in last couple of days, but again
Hmm.
from the lower level, again a recovery is taken place. DLF would be our preferred choice from that space. We believe that the way stock is holding above 800 level, I think there is a potential again to regain to its all-time high trajectory also. So I think 810, 15 would be your positional stop loss to buy DLF also. For positional perspective, 900 would be the next target. Again, from the same space as you pointed out, Suraj State, the stock has managed to give breakout. Very strong buying action has been witnessed in this stock in last 4 weeks. There is a series of higher high-low formation taken place. The way stock is now crossed above 600 mark, I think that there is still room to move further higher. 640, 650 would be the next target. Keep your stop loss around 600 to buy and hold Suraj State also.
Right. There is a very strong momentum coming into power stocks, which is both power producers such as Tata Power and, of course, financiers. There's no stopping Power Finance Corporation. There is absolutely a very strong bull run happening on REC. Rajesh ji, Tata Power, this has been a stock which has been very, very quiet and done practically nothing. But what are the charts of Tata Power telling you? 438, 439, 2% higher.
So I think Shelji stock is consolidating, and I think there is a high possibility that once stock crosses above 445, 448 zone, there would be a breakout of this consolidation, and then possible rally can extend to 465 to 470 also for Tata Power. So I think buy and accumulate this stock. Overall structure is bullish. Stock is holding the ground at higher level. Consolidation is happening in this stock. Your stop loss to be placed at around 429. So I think there is a high possibility that stock may attempt to give breakout over 445. Then really the extension of rally we can see towards 460 to 470 also.
Fair point. And take your pick, Rajesh ji. PEC or RFC, RECL. Very, very strong research reports coming in from Jeffries yesterday. And there is absolutely, absolutely no stopping these power finance companies. A strong move here. We see REC now up about 2.5%, 577, and of course PEC following suit. What are the charts telling you, sir?
So REC, PFC, both stocks are doing good, and the way stocks are moving up again, both stocks are now penetrating to their previous swing high. The way stock are forming higher top, higher bottom formation on daily, weekly time frame, I think there is a high possibility that again we may see a new all-time high for both the stock, and possible target for PFC we can see towards 565 to 570 for trading point of view, and then your stop loss should be placed at around 528 for REC. The way stock is moved up and now comfortably holding about to near term, short term moving averages here, there is a potential to cross 600 mark very soon. So REC is also buy with stop loss of 565.
Okay. Let's also get you to address the auto ancillary space as well, Rajesh ji. Of course, tire space was a buzz in a recent while. We also saw bearing makers also up and about. Today, again, there are several stocks within the ancillary pack that is in focus. So, Kalyani Forge, Setco Automotive, that's been consistently up. Tirupati Forgings, Gabriel India, Steel Strip Wheels, Precall, they're all up and about in trade. Where are you keeping your focus within the ancillary pack?
I think tire is one space where we are focusing. Here we can see a good traction going forward in most of the tire stocks. Strong buying action has been taken place in most of the stocks like Apollo Tire, Balakrishna Industry, GK Tire. All stocks have shown good buying interest. I think here there would be another really we can see in the tire space. At this moment, I think Apollo Tire one can look at, though there was some corrective move has taken place in this stock. I think in decline, if you get opportunity to buy this stock around 520, would be the again attractive level to re-enter in this stock. On the downside, 505 should be your stop loss. Once the stock again manages to cross above 540, there would be a rally to 560, 65 also. Gabriel is also looking very promising. The way stock is managed to give breakout of rounding bottom formation on weekly chart. Here there is a potential to continue upward momentum to 530 to 545. So Gabriel can be looked at this moment. Upside target 530, 540. Stop loss on the downside, one can keep around 485. I think another stock that we like from that space is Uno Minda is also looking promising. Stock is in uptrend. Some brief consolidation is taking place. I think again there could be a possibility of a continuation of rally. 1250 would be the next target for Uno Minda. On the downside, you can keep a stop loss of 1145.
Okay, got that. So that's the view coming in on the auto ancillary pack. How about the mainstream auto companies? Are you looking at Tata Motors or anything else beyond it as well? Tata Motors, M&M, both are up and about within the Nifty today.
Yeah, definitely. So Sakshi, I mentioned M&M in
Yeah.
beginning of show, and another stock from automobile space. Most of the stocks are looking promising. I think Tata Motor, yes, here also after a brief correction, stock is now attempting to cross again 1,000 mark, and I think we believe that once the stock crosses about 1,000 mark, here we can see a really towards 1,050 to 1,045. Tata Motor is also buy. Your stop loss should be placed at around 970. Again, from that space, one can look to buy around, this Maruti also. That stock is also looking promising. The way stock has recovered from 12,000 mark, I think here is again, potential to continue for the more upside. 12,700 to 12,800 would be the next target. So Maruti can be a buy with stop loss of 11,900.
Okay, ladies and gentlemen, there is a century on the Nifty. Needless to say, this is a record high, but 24,400 is within reach, 109 points higher. This is a breakout that's happened on the index on weekly expiry day, which essentially means that all those people who are unnecessarily shorting the market or, God forbid, buying puts are now going to get killed in the market. Again, led by banks, ICICI, Infosys, and TCS. Very, very sharp move coming in. There is a very strong breakout that is happening across the board on Nifty stocks. Let me just share some details on stocks that are at day's high. Of course, ICICI Bank is doing phenomenally well. You've marked Rajesh ji Infosys, but normally we don't pay much attention to TCS. 4,022. This is the price that we had seen when the previous buyback came into action. What are the charts of TCS telling you? Strong open interest, strong tailwind. Remember, Nasdaq is at a record high, and of course we are getting into the earnings season. What are the medium term charts of TCS telling you, sir?
So stock TCS is also looking bullish. The long-term stock, bullish stock and wealth creator stock. Though there was underperformance, but again, those who are looking for creating a wealth on a longer-term perspective, I think TCS would be the stock where one should keep on their portfolio. But for trading point of view, yes, there is a breakout of falling channel on a weekly chart. The way stock is holding above 4,000 mark, I think there is a high possibility we can see a target towards 4,100 to 4,140 on TCS in the continuation of this up move. Because this is the only sector where we are not seeing any kind of significant participation in the up move of this Nifty. So I think IT would be the sector where we can see some support to the Nifty at this juncture, and there could be a possibility of some really in the large cap IT stocks. As we mentioned for Infosys, that is also trading at day high. I think TCS would also contribute to this up move. So here one can buy for trading point of view also with stop loss of 3,990, upside target 4,080 to 4,100.
Right. Please keep in mind, ladies and gentlemen, that you are making more money by trading less and holding stocks, even if you are a positional trader. Intraday, of course, just say limited to defense counters, they are doing phenomenally well, and of course, the entire PSU pack, whether it is railways or banks. But if you are a positional trader, that makes absolute great sense. And if you are an investor, ladies and gentlemen, nobody can beat you. This is a market for buy and hold. You will make tons of money if you continue holding the counter rather than trading in and out. I would have loved to get Rajeshji's view on Axis Bank. There is going to be a change in digit. It is going to cross 1300. But as always, this is a running joke between him and me. He declines because of regulatory issues, and I never fail to make it a point to request him to market, but he doesn't, and therefore we take the view on ICICI Bank. They are corporate twins. जो एक्सिस में होगा वही ICICI में होगा, और जो ICICI में होगा वही एक्सिस में होगा. रिकॉर्ड हाई ऑन ICICI बैंक. राजेश जी बताइए क्या कहता है चार्ट.
So very strong chart for ICICI Bank. This is the third consecutive week where we are seeing, continuation of rally. The stock is continuously moving in upsloping channel on weekly chart. So I think across all time frame, ICICI Bank is showing strength, and the way stock is now holding about 1200 mark, I think there is a high possibility. And again, here on the Bank Nifty also our view is bullish, and we believe that towards budget we can see a good rally in Bank Nifty also. So ICICI would be the contributor to this rally, though HDFC Bank has also moved up. So I think ICICI Bank, HDFC Bank, these two stocks are looking promising from banking space, and we believe that the next target for ICICI Bank we can see towards 1280 to 1300 also. So 1195 should be your stop loss to buy ICICI Bank at this junction.
Okay, got that. So that's the big heavyweight banking counter for you. Record high levels continue on the markets. Both the Sensex and the Nifty are trading at all-time high levels. Viewers, for the first time, 24,400 is with us as far as the Nifty is concerned. And of course, it's the IT space today that's taking the lead, 1.3% higher, along with some of these heavyweight counters that Rajeshji has marked. So ICICI Bank up 2%, contributing to the gains. You also have HCL Tech, Tata Motors, Infosys, NTPC and TCS are some of the stocks that are actually doing well at this point in time. Let's start to look at, and the auto space is also now driving into a faster lane. You can see the index has now climbed. It's now 0.6%, 0.7% higher in trade. Tata Motors driving the show. Bosch, M&M, Samvardhan, Motherson, these are some of the stocks that are doing well. But within the F&O space, Cummins India, how are you looking at the stock, and where do you see the next target, sir?
Yeah, definitely. So Cummins India is also looking promising. Now its stock is holding above 4,000 marks. So I think if it continues to hold above 4,000, there could be possibility of 4,100 to 4,120 also for this stock. So overall structure for stock is on the bullish side only. Some consolidation is taken place on the near-term chart. But the way stock is holding above now 44,000 mark, I think one can buy this stock also. 4100, 4120 would be the next target. Keep your stop loss around 3995.
About the other C counters that starts with C, Container Corporation, 2% higher within the PSU space. No stopping this one. How are you looking at it?
So for long-term perspective, yes, our view is bullish. For trading perspective, some corrective move or some consolidation is happening in this stock. I think for trader, wait for 1060 level to cross, then one can enter in this stock, because above 1060 there would be a short covering action in the stock, and then really can extend to 1100 also. But at this moment, I think some consolidation is happening in this stock. But still, those who wants to buy for positional perspective, one can buy with stop loss of 1010.
Okay, got that. Let's again see what else we can take a view on from Rajeshji. IT, auto, real estate, infra space, metals is something that's been rising sharply. Which is your favorite metal counter as of now, Rajeshji?
So from metal space, my favorite would be Vedanta, because the way stock has holding the ground after a breakout. I think here there is a possibility that we can see a rally in this stock. 500, 520 would be the next positional target for the stock. So one can buy and accumulate Vedanta at this juncture with stop loss of 445. Another stock that we like from metal space, that is Jindal Steel and Power. Here also stock is almost trading near to its all-time high trajectory. Some brief consolidation is happening in this stock, but I think here is a potential that once the stock crosses about 1070 mark, here we could see a resumption of up move, and then possible target towards 1150, 1200 would be the on the card on a positional perspective. So Jindal Steel and Power can be looked at with stop loss of 1015.
Fair point. 9:54, ladies and gentlemen. We have 5 minutes to wrap this show, and it's by all accounts been a great day. Sharp rallies on the weekly expiry of the Nifty. 24,400 was briefly touched. That's a record high. We tracked 19 indices for you, ladies and gentlemen. Sakshi, all 19 are in the green. Advanced decline 1524 to 688. Money making has become so easy that it is frightening at times.
Yeah.
कि इतनी आसानी से पैसा बन रहा है. Again, I again advise caution at all levels, ladies and gentlemen. This is the way that retailers get wrapped into stocks that make little or no sense because of consecutive 5, 7, 10% rallies, and then become the victim of operators. So please be very careful. The advanced decline ratios in the broader indices, NSE 500, 314 out of 500 shares are in the green. The mid cap 100 has 64 out of 100 shares in the green, and the small cap index has about 61 shares in the green. Very strong moves coming into the Nifty Energy Index, 42,053. All 10 stocks are in the green. The Nifty PSU Banking Index, 12 out of 12, 10 stocks are in the green, and the maximum move is coming in the Nifty Energy Index. The small cap ones, because we have seen a good monsoon across, spreading across the likes of entire India. Therefore, you see hydropower makers doing pretty well. NHPC 103 rupees 40, almost 2% higher. Look at SGVN, that is also doing fantastically well. At the moment, SGVN is at 140. This is one of those stocks that only wakes up during the monsoon session. So one has to be very careful, and of course they are coming out of a long consolidation phase. Frankly, again, it's defense and defense all the way. I'm just marking the stocks right there in front of you. We are not going to take a technical view. 6% higher. Cochin 2583, Basgaon 4.5% higher, 4902. Garden Reach 2.8% higher, 2528. And the lone stock that Rajesh ji has suggested from this space, BDL and BEL. So please keep an eye out on these two. The rest are sort of just too jarring even for me to take a view. If you have any of the 5 or 6 PSU defense counters, ladies and gentlemen, don't sell them. That's the only advice that we can give to you. Rajesh ji.
So I think, Shalji, we have seen, as you already advised, that a very strong rally already done in the market, and I think low quality stocks are also moving up. That's the worry sign in the these kind of rally. So I think one should always be cautious to when you are buying low quality stocks in this kind of market, because if any correction comes in the market, those stocks will stuck in your portfolio. So I think always focus on the quality stocks where you have visibility that in any condition, if any correction happens in the market, there should be a probability of again to continue upward momentum in those stocks, because high quality stocks, good quality stocks will again show the performance in terms of their quarterly numbers, and then there would be again buying interest in those stocks. But low quality stocks will not return to those prices. So
Right.
that always keep in mind when you ride these kind of bull run in the market. Yes, money making is very easy at this point of time, but I think easy money will not remain on a permanent basis. It's part and parcel of bull run. So sometimes market gives you easy money, but when there is a reversal, it would be a tough time to survive in the market. So I think one should always cautious, focus only on the quality stocks where we have long term visibility in the sector. So that would be my advice at this juncture.
Okay, very well said, Rajesh ji, and thank you so much for that view for all our viewers. A sensible advice coming in at this point in time as to how you really need to approach your portfolio stocks, and some of those stocks that are good quality versus those that have just risen in the momentum. We were talking about the defense stocks. Mazagon Dock has seen its market cap rise above 1 lakh crore mark today. Remember, the stock has rallied 280% odd in just the last 1 year, and that's a landmark achievement for Mazagon Dock as we speak. All right, at 49.30 odd levels, a 5% uptick for this stock. We'll continue to watch out for big buzzing spaces for you throughout the trading session, but we'll wrap it up at that. 111 points of an uptick on the Nifty, 24,399 for you, hovering around that 24,400 mark. The Nifty Bank is about 0.2% higher, 53,195. The IT space is contributing sharply, about 1.2% higher. Auto, realty, infra, small caps, mid caps, the metal space, oil and gas, these are the sectors that are definitely contributing. Top movers at this point on the Nifty: ICICI Bank, HCL Technologies, Tata Motors, Infosys, Hindalco and TCS. Top drags on the Nifty are those stocks within about 10 odd stocks in the list on the downside. HDFC Bank is now lower, 1.5% down. Checking the gains on the Nifty, IndusInd Bank is down 0.8%, Adani Enterprises down 0.7%, Cipla, Dr. Reddy's and Titan are the other drags at this point in time. But what we'll do is we'll wrap up this morning edition for you viewers. Thanks a lot for tuning in from both Shail and me, but do stay tuned as action continues on the other side, and a lot more is going to be coming up. 12 noon, I'll be back with daily calls that addresses all your stock related queries, and we'll both be back at 2:30 p.m. for the closing show.
Welcome back to Business Today Television and to our special edition of Market Gurus, where we get you to meet the finest brains that are there on Dalal Street.